This is Jeff Scott. I am back from my trip to visit my son in Germany, and this is my weekend review. It is approximately 4:45 on August 6, 2017. Based upon the time zone here in the Eastern time zone, futures are not yet open. So this is based upon the data existing prior to any futures. I entitled today, Persistent Bull Develops Fleas. We continue to see higher closes on the Dow, strong S&P, but clear weakness. My fleas would be on the NASDAQ and on the Russell 2000. And where the fleas really existed are if you missed your earnings. Case in point, AAOI made, this is one where you wonder about management, where they came out earlier in the month, and I was long at the time, and pre-announced a big win on earnings and revenue. Stock went up from the 40s and 50s up to almost 100 in a matter of just a few weeks of trading. And then their earnings come out and they laid an egg by markedly reducing the forward-looking revenue. So it's talk about manipulating your own stock. There wasn't, I don't believe, a secondary that came out in the meantime, but my goodness. Now, I was long going into the earnings, and I was very lucky. I was sitting at my computer when I was in France. Now, I still gave up some of my profits because I looked at it and I said, how bad could it be after they came out and gave a positive pre-announcement? But it was trading at the time at 96, 97. My cost basis, I have 55 calls that I bought for about $4 that I'm in. So I actually sold 105 puts, got about $8 on those, and I took the money and I bought a 97.80 put spread. And so I was basically covered down to about $82 as it worked out. Of course, it opened at 75, at which point I said I'm out, and I closed all my positions. The $85 put the 105 put went to zero. The 97.80 put spread I sold it pretty close to the max at 17 minus what I paid for it. And then I took some heat below 80. I never thought it would drop so much. But you look at that, you look at Coherent. I did a similar trade around Coherent where I got hurt some, but because of the use of protective puts, I was able to avoid much of the pain. But this is not what you want to see in a happy, bullish market when leaders, including Amazon, fall after earnings substantially, especially if you own them. As always, it's for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am not affiliated with any software vendor or trading company. Tools demonstrate those I use in my daily trading. I paid for all the tools I demonstrate. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. I will from time to time talk about options. I do use a lot of options in my trading, but I recognize, and I hope you recognize, that options can be, especially if you don't know how to use them, risky instruments to trade. And I refer you to the Options Industry Council, the OIC, for some of their outstanding documentation that talks about the risk. I have my own style. We'll talk in a few slides about an upcoming educational event. I entitled What I Do is Be Your Own Guru. I stole that from my mentor, Ian Woodward, who taught me pretty much everything I knew before I met John Person. Ian, we lost about a little bit over a year ago. Brilliant, wonderful person. Really said that he's not a guru. He teaches you to be your own guru. And I think that's what we have to do as traders. We need to learn from the people that we think can provide value and then create our own style. So I would say that my style is baked in CanSlim with O'Neill, improved with Morales and Catcher, improved further and taken to the computer with Woodward and Brown, Ian Woodward and Ron Brown. Ron is a big user of HGSI, as I am. Ron has gone down a volume spread analysis path. I've stayed pretty much with the traditional Ian, and then where Ron has followed VSA, I've actually started merging some of John Person's teaching, whether it's his high and low close dojis, his PPS signals, how I use pivots in trading, and just how I trade. John Person is an excellent teacher, mentor, author, developer of software, and I find his tools to be additive to what I do in CanSlim. I highlight Guy Cohen down here and a couple of his sites because for those that don't want to work this hard, who are looking um, for some really great tools, and his independent OVI indicator I find very useful, who are looking to learn. I find that guy to be a great teacher and have some great tools as well. Van Tharp Money Management and my trading buddy, George Lee, up in Western Canada. I take those influences, a few others, Bollinger, Elder, etc., that I've learned over the years, and I develop what I think is a great way. It works for me of trading, and I've made some decent money. This year has been a great year despite this past week. I just want to call out again and remind folks that there is a 3-day meeting that John Person's going to have Thursday, Friday, and Saturday, November 30th through December 2nd. I will follow this with a 1-day event on Sunday. It's in our hometown of Palm Beach Gardens. For information about John's 3-day summit, either go to his website, personsplanet.com, or call Mary at 561-694-5833. For interest about my 1-day seminar, hgsidoc@gmail.com. John has asked me to do some of the presenting during the 3-day. I'll probably do a short, maybe an hour or so after lunch each day, and show how I use John's tools. I probably will not spend much time during Thursday through Saturday talking about how I use HGSI. I tried that in the past, and I think I confused people. However, on Sunday, I will flip it, and I will do a predominantly HGSI program and talk about how I complement HGSI with John's tools. For more specifics, Sunday, December 3rd, I have no brand. I don't do this to make money. I trade to make money, and I build businesses and sell them to make money. My teaching I do because I like to teach and a way to give back, something I learned from Ian. But I will basically join me as I demonstrate and teach my favorite tools and strategies that have led me to a 7-figure return this year, 48% year to date, where I merged my learnings from Ian and John Person. Now, about my style, I'm not tied to my computer during the day. I require less than an hour each night, more on the weekend, mostly preparing for the webinars. And historically, and now it's usually working full time while I'm building a company, which is what I'm doing now. My topics will start with HGS principles, learn from Ian, how I find my A trade using a combination of HGSI, Thinkorswim, and TradeStation. Once I find my A trade, how I manage the trade, stops, position size, my favorite option plays that I may take that trade to increase my return or reduce my risk, and then how I set my scans in TradeStation, Thinkorswim to help find me those trades, and then close with putting it all together. My meetings and John's meetings at the Hilton Garden Inn. Now, John's program for 3 days, that's between you and him. He had a special going, and you should reach out to them. My 1 day will be $400 if you attend John's meeting, $500 if you did not. Limited to 12 attendees. I've had about 5 commitments right now. Breakfast, lunch, and Saturday night dinner are included. Those who've been to my programs before know that I don't do this to make money, so I figure out how much extra I have and I spend it on Saturday dinner. And this will be a shindig to be remembered, like most of them are. And then each attendee will get PDFs of my slides and MP4 videos of the presentation as long as they come out. And if they don't come out, I'll just re-record them. What I need in my desert isle, I have a lot of trades. I talk about TradeStation, Thinkorswim from our trading platform. I also, if you were at my house looking, would see Genesis up as well. Some of the things that I've done in futures, some of the scanning tools, Genesis is great, but most people aren't going to spend the money, and therefore I restrict these programs to TradeStation and Thinkorswim. For analysis of the market, I don't think anything beats HGSI. Unfortunately, John's indicators are not in HGSI, so I have to do the scanning and radar screen and TradeStation. EdgeRater is also a great tool. You'll notice a lot of the shortcuts I take to my analysis I use with EdgeRater. I do use seasonality, but I think technicals and meaning the chart trumps seasonality. But I do find stars from seasonality and make sure the technicals look good at the same time. If I'm buying something, I'll typically look at its seasonality, make sure I'm not in the wind of a bad time to buy. And then there are a number of websites I use. Some of them are listed there, and what's not listed are a number of Guy Cohen sites, which I also use. HighGrowthStock.com, that's the website for High Growth Stock. That is not any relationship to me. I don't own the company. I get no commissions. The points here: a free 30-day trial, no credit card necessary. If you go under investing strategies, you'll see a list of contributors. Look for Ron and myself, and you'll see some up-to-date teaching webinars, how to trade, how to use the programs, and some of our different styles. Stock patterns are cyclical. My God, someday we're actually going to roll over and get into a real correction of 8, 10, 12%, maybe even a bear market. I promise someday that will happen. I just don't know when. And rather seeing these prolonged trends up and down, although we're in a nice one on the Dow, certainly, it almost seems that we've been living for the last couple of years, truncating the top and having these short moves up, pullbacks for 5 days, move up, pullbacks. And so whenever I think we're going to roll over, we think to take another leg up. At one point, we're going to stop that next leg up. That's important to know where you are, because what you're trading and how you trade it probably depends on where we are in that cycle. By the way, that little graph recurs on stocks, indexes, industry groups, on any time frame from a tick all the way up to monthly. And again, I do establish how I'm trading based upon where we are. And sometimes I may have different indexes that are in different places. Complicates life a little bit. Industry group could be different than the index, and the stock may or may not be the same. But I'm a top-down investor, and I'm looking for buying markets that the market is strong, going long, looking at industry groups, finding the top industry groups, and then finding the best stocks in those groups. If we look at how we ended the day on Friday, red means it was a down day, green was up. It was a pretty darn good day, and despite a little bit of heat on AAOI, it wasn't a bad day at all. If I just take a look, what do I see? I see utilities were weak. Why might that be? Interest rates went up because of a good employment number. If interest rates go up, I might expect financials to be strong. Now, Wells Fargo was weak because it's got some issue with fake auto insurance policies, apparently, just like the fake accounts that were set up. And the XLF includes Wells Fargo, includes Berkshire Hathaway, which I believe had an earnings miss. But if you look at, and then some of the American Express and AIG, but for the most part, the banks, the big banks were up. The regional banks were all up. Broker dealers also strong, and scattered strength throughout. Retail, I point this out, not that everything was green, but had a lot of green. So retail perhaps changing some. And biotech, I think there's a disconnect here between healthcare, XLV, insurers, hospital groups, big pharma, and the IBB and biotech. I think that biotech has some strength. Home builders have been strong as well. Now, I'd like to be bearish here, to be honest with you. I think this August and September, I'll call it out later, are tough times to trade. Often you'll see 3% up, 3% down, 3% up, 3% down. Market doesn't go anywhere and your accounts get smaller because this churning really hits you, especially if you're an options buyer. But if I look at this and I look in the upper left-hand corners, the E-mini. In fact, let's see if I can just look at this in real time. I haven't looked at this, and this may or may not turn out to be a good idea. Major indices, here we go. And let's just do this. All right, I got to change this real quick to IWM. Thank you very much to the TFs where they got ridiculously expensive, and Thinkorswim started charging $100 a month for them, and I'm not going to do that. I mean, some of you can do that. So if we just go very quickly, I look at the daily E-mini, and I see nice uptrend, 17 above the 50, above the 200. OBV pulled back some over the last couple of weeks, pulling into that 17-day. VSA shows weakness on no demand, but we're moving from lower left, upper right, shallow pullback. I'm still bullish on the E-minis. The next one is the NASDAQ futures. Again, lower left, lower to upper, left to right. Gentle pullback into the 17-day. OBV actually looks stronger than the E-minis. Hard for me to look at this and get very bearish yet. I'm bearish, but hard for me to be very bearish when I see that. Now let's look at the Dow futures. The strongest kids on the block, you can see the extension above the 17, above the 50, and OBV that's pegged at its high going back for months. And then the Russell futures, actually the IWM, because we don't have the TF, and you could see that the IWM is pulled back, but it's only pulled back $4, so about 3.5%. So clearly the weakest here is the small stocks. Speaking of weak, we've been weak forever on the VIX, and we continue to be not as low as we get, but we're struggling right at the 17-day at about 11:30 on the VIX futures. Again, a rising VIX, your account's going to get hammered. A falling VIX is when you make money if you're long. We're kind of sideways and kind of where we rest at over the last several months. And then what may be bouncing and changing is the dollar. Still is below the 17, the 50 and the 200-day moving averages, but had a nice bounce on Friday with the strong employment numbers. So that's how I would look at a little bit at some of the market over a, let me see if I can get this right, there we go, over a daily time frame. If I want to look at a weekly time frame, I can do that as well. And I probably got to do the same thing here. I don't use this computer as much as and so I don't have everything updated. I use it pretty much for lightweight travel and when I do these programs. So let's take a look again with the full screen, maximize the sell. E-mini on the weekly, what's not to like? Not quite at the high, it's a little bit off its all-time high, but a nice uptrend on the E-minis on the weekly. On the weekly NASDAQ, again, have we stalled some? Absolutely. Do I see anything bearish on this? Do you see anything bearish on this chart? No. Yes, we know the market's going to pull back. We're all waiting for the market to pull back. Maybe this is the beginning of that pullback, but I got to trade what I get, not what I think I get, and that looks like a couple of pausing weeks and not a very bearish picture. The Dow, let's just forget about the Dow. It's gone freaking crazy. A lot of it being Boeing and Apple. Glass of wine, it must be 5 o'clock. Oh, it's almost 5 o'clock here. These are on the weekly. Even when you look on the weekly IWM, it's really going sideways here. And it's been in a box for some time. And it's still in that box, but it's going sideways. If I look at the VIX on the weekly, it's near the bottom of its trail. And if I look at the dollar, isn't this interesting? It pulled down to the 200-day moving weekly average or 1,000-day moving average and bounced. Boy, would this be a place that you expect the dollar to have a little bit of a run, and perhaps it goes back and tests these moving averages. So a little bit of where I see the market at. It's not very depressing to me. I still feel that the bulls are in control. I just think we're in a month or two where bad things happen. Let's go and look just at my view from my Genesis. And actually, let me see if I can make this bigger. I apologize, I didn't do this earlier. And again, I've got my E-minis, my NASDAQs, my Russells, my Dow, my NYC and my Dow. And again, the point here is daily, weekly, and monthly. You still got lower left, upper rights across the board. The NASDAQ obviously pulling back some this week. Again, hard to be very bearish, but it is a time of year when I think the risk is higher. Rates stabilized. Well, they moved up a little bit Friday, both on the 10-year and the 30-year. That contributes some of the dollar strength. Now, what's interesting is you can't probably see it very well, but white is the Russell 2000, white is the AD of the Russell 2000, yellow is the S&P. There was a divergence where the AD on the small stocks pulled in this week despite higher highs on the S&P, but on the Russell 1000, the bigger stocks, the AD line and the price were the same. So is the Russell 2000 telling us what's going to happen, or is this just a little weakness on the small stocks that will resolve to the upside? Breadth remains in the middle, strong but not overbought, and the new high, new low ratio, and I called out 2 weeks ago that we were at a point that we often reverse, has pulled back to more of the middle. So I don't see any pressure on this market that it has to pull back because it's overbought, maybe XLV a little bit, but overall the market is okay. The daily McClellan and the weekly McClellan continue to trade the oscillator and the summation index, the oscillator in a small range around the zero line, and we continue to see higher lows and lower highs on the summation index. Buckets give me an idea of how overbought, oversold the market is, and it's interesting. We have very few stocks, less than 6% above the Bollinger Bands, 9% below. Not a signal in itself. And then you look at about 50-50 above and below the midline or Bollinger Bands. I would say that's as neutral as you can get. We did see a Hindi fire on Wednesday on the NASDAQ, but we're looking good on the NYSE. Remember, the Hindenburg, a single spurious event, does not necessarily mean to head for the hills. When you see multiple Hindis, especially multiple indexes firing them, it's a sign perhaps of a top where the buyers are the small guys and the big guys are running for the hills and selling to us. Right now, I've made it red because we did have a Hindi. Maybe I should have made it yellow. We'll see what happens this week. Market tone, we are back in sort of a choppy where, as you may expect, the big stocks are green and some of the smaller stocks have gone red, but we're chopped on the market tone. And on sector strength, we clearly weakened this week, and really the only green thing that we got right now, I think that's financials. Canaries in the coal mine, these are some of the largest stocks in the market. I've been following them as per Ian for several years with an index. I think there's $500 purchase of each stock. And looking at how this index fares, you expect to see this to break with or before the market's breaking. And all I can say is it's sideways. And maybe you could even argue that it's forming a wedge, but it's sitting above the 8-day exponential average. So despite the weakness in Amazon and Netflix and Google, the others perhaps are keeping this market afloat. So we're no longer breaking out to new highs. So let's just change this, holding close to new highs. I'll have to get mad at my staff that didn't, the staff is me that didn't update this. I'm joking, I have no staff. I also put together an index, kind of a la Ian, taking the leaders back on June 27th. Again, expecting that when this index breaks, it's over for this bull run. Interestingly, we had a strong day on Friday with a kahuna. We've been above the 50 pretty much since December. We're still cooking on this, and this hasn't broken yet. So reasons to be bullish, I think, or to not be overly bearish. Here's the news for this week. The dark black, this comes from Bloomberg, by the way. The dark black represents some Fed speakers. We always have the Baker Hughes rib count. CPI on Friday might be interesting, looking for some inflation, which will help the banks and might hurt some of the things like REITs and utilities. Jobless claims on Thursday. Energy status on Wednesday. Not the busiest news week I've ever seen. Lots of earnings still. And, this is just an exhaustive list. I don't expect you to go through and look at this except to say you got to know when you're earning. So, in my famous words, or not so famous words, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I knew when AOI's earnings were there. I did a risk assessment. I thought with a positive pre-announcement, the downside risk was minimal. I chickened out 5 minutes before the close, the day before earnings. I sold a call, bought a put spread, and the only thing I did wrong is I shouldn't have had a put spread. I should have had a naked put that I owned, bought a put, and I would not have lost any money on the trade. It was a very positive trade, but I gave up maybe 20% of my gains because I still had the between 82 and 75. I was protected from 97, though, down to 82. So know your earnings. Market thoughts. Dow continues a record run while secondary issues lag. Dollar firms, rates rise. Accounts have been obliterated by high-profile EPS misses. I highlighted a few. Market appears at a decision or near a decision point. Will the secondary issues lead to an overall market correction, or will the overall market move to new highs and follow the Dow? Remains to be seen. Although cracks are occurring, the indexes that I use and Ron Brown's LLUR are actually holding. But remember, August and September are notorious for directionless churning, which can devastate one's account balance, especially if one is buying options. So on that note, let me save this because I made changes. Let's close it. And let's go look at the markets. We're going to start with my 5 or 6 points I like to look at in TradeStation. And so just to remind you, number one, am I in a buy or sell? From John Person's indicators. These are also found on Thinkorswim. Number two, looking at Alexander's impulse indicator. Am I red, blue, or green? Green is the most bullish. It means I should be buying or holding. Blue means indecisive, no limit on buys or longs or shorts. But if I get a red paint bar, I should not be going long. I should be going short or holding. So number one, PPS is in a buy. Number two, that's in a buy on the daily, weekly, and monthly. This is the E-minis. I'm blue across, which means a little bit of indecision, but indecision in the setting of a buy. Number three, do I see any dots suggesting I have a divergence on the MACD? I had some back here. The market sold off. I don't see those right now. Number four, am I within the envelope or above or below where I might expect a reversion? Don't see that. Number five, where am I on my high jump bar? I'm at 68% or 58%, which is fine. And then my bongo daily, weekly, and monthly are green. Hard for me not to be bullish. On the E-minis, we've pulled back a little bit into a zone that maybe we see another move up. Let's look at the Dow. We are in a buy on all three time frames. We have green. As I said, this is the stronger. Well, sometimes you see this despite reducing participation, and you could see these red dots suggesting there could be some divergences building underneath. We are also above the envelope, so I do expect at some point the Dow to either go sideways or come back in. Don't know when. That's the third point. The fourth point is, let's see, green, envelope, divergences to the downside on the daily and the weekly. Only at 68%, which means if you look at the extension from the 1750 and 200-day moving average over the last 200 days, we're only at 68% of the highest amount. All my bongos are green. Concerned here because we're above the envelope and that divergence, but we're still in a buy. We look at the NASDAQ, not as pretty. Sideways in blue, but with a sell signal on the short term, still in long-term buys. In the envelope, no divergences, 57%. The daily bongo has gone red. The weekly bongo, which is more important to me, remains green. So neutral to a little bit concerned about the NASDAQ. And then the weak sister has been the Russell. And one can see a pretty significant sell-off here on the daily and the weekly. See how far the high jump bar is down, and we're in a weekly bongo red. So the Russell is the weakest. If I look at the dollar, changes a month. We now have a candle's gone from red to blue. We have a new buy signal. We've had some positive convergence on the MACD. My high jump bar is very low at 13.48, and we popped the daily positive bongo. We still got a lot of work to do. I don't think we're going to go to new highs anytime soon, but maybe a couple weeks bounce in the dollar is in the cards. Note, of course, I was in Europe for the 2 weeks where we set the annual lows, but hey, what can I do? Bad luck happens sometimes. Had a great time though. Dollar's weak. Gold should have been strong. Now we have to worry about gold. So let's look at gold here. Gold has a new sell signal, so that's something you might want to pay attention to. Oil holding around 50. Yeah, it certainly has had a big move going back since June and has not pulled back as much as one might expect. Is it different for gold this time? I don't know. I look at this on the weekly and we're up near weekly trend line resistance, so we shall see. And monthly, we're still in the sell signal. So it remains to be seen. And I bet you know what you're going to see on the VIX. VIX has been pretty low. Went into a buy signal, popped, and it's just been going sideways. So not much here on the VIX. Now, very quickly, without spending much time, except to say my thoughts. Healthcare. I look at this, I'm in a sell signal in red. I'm a little bit nervous about the XLV here. Went from overbought up here outside the envelope, sideways, and now looks negative. Financials, very bullish on these, but they've got some divergences here that might keep me honest. Discretionary, XLY. Still in a buy signal, but in a pullback. Amazon's in here, I'm sure that affects that. Technology's been leaders. Still in a buy signal, but with a blue bar tells me it's slowing. Industrials. A new buy signal on Thursday with a green paint bar. Maybe industrials are going to take another leg up. Staples. A new sell signal. Right? That should have meaning to you if you're heavy in staples. Materials. Selling off. Utilities, probably a new sell signal. Let's see. Well, not yet. Might be one coming. Utilities ran up to the upper bar here. Still strong here, but looking at them, I think that they've run their course. Energy, a new sell signal on Thursday. We don't need to see that. So not everything working at the same time here. So let's go into Hgsi, and let's go down to the Woodward and Brown user groups, Major Markets Plus. Let's rank this by top-down view, which is all price and volume, which rates the 1 day greater than 5 days and a little bit value over 3 weeks. And you can see that in the short term, the Dow and the dollar were leading. Let's take a look at some of our favorite things here. I'm going to go into a relatively clean, not a relatively, a cleaner chart, still dirty chart. Let's talk about some of my favorite indicators here. So up on the top, you have the daily, you have the weekly bongo on top and then the daily bongo. The bongo is my market buy and sell signal, something I was involved in developing about a decade ago. We'll talk about it at my live meeting. The next here is accumulation distribute. Actually, is the Hindenburg here and here, and I have two different ways of measuring it, and it's on the Dow. We haven't had a Hindenburg fire in over a month. I had some trend lines that I did last time as we were sort of wedging up to the top, and we are sitting at the top of my trend lines. So do we break out and go higher? I think that's a possibility this week, but I've been more concerned about it falling down. I'm still bullish, and I'm looking for signs to not be bullish. We are at the top of the pattern, which means we often pull back to the bottom of the pattern. But you notice it's getting narrower and narrower. Is this a rising wedge, and is it a bearish pattern? Maybe. Let's see where we go. Dow. So I'll just say the S&P looks like it's relatively intact, but I think the risk continues to grow. The Dow, which we talked about before, has been the big massive winner. And you can see the Dow has taken out prior highs and is just in a crazy move. Again, I said much of this is probably Boeing. The NASDAQ, talk about, well, that's the gold, so it's not the NASDAQ. Sorry about that. NASDAQ also been in a wedge. Was it a, or is this a megaphone top? What remains to be seen. And last, I talk about, does it pull down? Does it go up? We're right up against resistance on the NASDAQ as well. Let's clean this off. Pulling back to the 17. NASDAQ as well looks relatively healthy. The weekly bongo is green. The daily red just signifies a short-term pullback. Now, does it pull back midway and move up as it did here? Or do we have more damage control? I'm the one that thinks we're going to pull back, but pull back and then bounce to go higher. If there's been weakness, it's been in the Russell 2000, and this is where I did a box in the trading range, and we're still within the box. Weekly bongo is red. I'm not buying the Russell here. I like to buy it down here. If it got here, I'd buy it if it breaks out. Right now, I'm just watching it. We talked a little bit about the dollar reversing, and you can see here. Let's clean this stuff off. The dollar pulled down here, still in a weekly bond goes red, so it's still bearish. We'll see if this can pull back up to the 50. The VIX, which has been quite low, not as low as it's been, but still pretty low now in a weekly bond go sell. Gold, which should have been strong with a weak dollar and now pulling back, has sort of been in a trading range. And if anything, gold looks to me with the dollar firming, does gold come down here and test that 200-day moving average? I think that's going to happen. And then silver, which had a tough week, well below its moving averages with a kahuna to the downside. And then miners, which would reflect perhaps a bit of gold and silver breaking down below its moving averages. Then we looked at oil, the bond index real quickly. With a strong dollar, rates will go down, bond prices will go up. With a weak dollar, rates will go, let me say it again, strong dollar, high rates, falling bond prices. Weak dollar, lower rates, higher bond prices. If rates are going up and the dollar's firming, then bonds may not be the place to be hiding. They sold off some on Friday. Next, I'd like to look at the industry groups. Go down to 0.7. And let's look at the number of groups that were forced to the upside, 51 on the 2-day force, while we only had 5 to the downside. So things that were not working, application software. Some of these, like Activision, had great moves and just pullbacks in an uptrend. Now I'm going to add the rest of my indicator set. I'm now adding a short-term and a long-term force, accumulation distribution. Sorry about that. Let me go get a drink. All right, I'm sorry, I'm back. But up here you have a Bible gap up. Here was a Bible gap up that occurred here, yellow squeeze. Then you have the mobile breakouts and breakdowns. On my price charts, you have candlesticks. Obviously, the dark gray is the industry group. The red dots and the green dots are Wilder's PSAR. 8-day exponentials, magenta, and then 17, 50, and 200 simples, the green, blue, and the red. Down here I have pocket pivots from Morales and Catcher. Dark blue, dark red are big up and down respectively. Lighter blue and lighter red would be a 5-day, the darker ones are 10. Unbalanced volume with a moving average. The red and the green are market indicators called the Eureka and the Phoenix, which are follow-through days. And then down here we have the kahunas. So you can see Activision's been in a nice uptrend, just had a tough day on Friday. Was down 3% on 10 million shares. Benefit Focus sold off hard. So you can see that this is identifying some of the weaker groups. Managed Care Index, I know it's Cigna. Looks like it's topping and rolling over here. Had a bearish engulfing pattern, a PSAR reversal, a red candle high, a mobile breakout from a squeeze, a pocket pivot, and a kahuna to the downside. So I can find stocks that I might want to short from these lists as well. Mortgage finance companies, Ascent did very well, but some of these others did not look good this on Friday. Probably the higher mortgage rates, the higher interest rates spooked them. And you could see a breakdown below the 50 on Annaly there, which also is a 10% dividend payer. Department stores and computer hardware. If I look at the intermediate, I've got 51 on the 5-day down, and I've got 34 on the 5-day up. So clearly not a big move to the upside or downside over the last 5 days, but on the short term, we have a lot more to the upside. Despite XLV being weak, notice that biotech is up at the top. Again, managed care, and maybe some of the big pharmas are hurting. Specialty pharma, telecom, banks, internet services, auto, steel, internet, and banks. That's where you want to be playing. Home builders look pretty good to me as well. They're down here at number 26. I right-click on biotech, and I typically will go down through the top 10 groups, looking as far as their index. United Therapeutics is sideways. They have a number of very interesting drugs for pulmonary fibrosis, which has high pricing power. Everything turned green on Friday with buyout rumors, whether it's Gilead, Sanofi, or whomever. I don't usually chase these, but this hasn't gone up much. This is one to watch. Don't know anything about Sage Therapeutics, but a beautiful lower left, upper right, a little bit loose for my taste. Pull back to the 50. Big move up on a Bible gap up, mobile breakout from a squeeze, pocket pivot, and a kahuna on Friday. Does not make money. It's one of these developmental companies. Looks interesting. I don't like Spark as much. Celgene is a big kahuna. And biotech had a big move up here, sideways. Is it ready to roll again? This is sort of a bellwether for whether biotech is going to move. Tesaro, a darling that sold off hard based upon potential valuation, potential takeout candidate. So there's some interest in biotech. Celgene to me is the bellwether. Specialty pharma. Here's a fallen angel, Karen Therapeutics, who had a negative data, or not negative data, but not as compelling data as the street wanted come out. And you can see how it sold off, gone sideways. A kahuna off of the 200. This made my buy list as a pullback to support and some momentum coming in. Neurocrine Biosciences, kind of loose. Spectrum, never really liked this company, always questioned their products, but they've got some new things coming out. Failed cup and handle, and now a breakout. With a Bible gap up on Friday and a kahuna, you might want to look at Spectrum. GW Pharma, sideways, now breaking above the 200. This one was interesting to me. Don't know anything about them. Global Blood Therapeutics. Doesn't make any money. Pulled back to the 200, now broke above the 50. Mobile breakup from a squeeze. When I start to see multiple positive kahunas, especially in a market that's not rip-roaring, I get interested. So this one looks interesting. It's on my buy list as well. And I go down these one at a time. Telecom carriers, I think of interest payers. Cincinnati Bell, big move this week. We'll probably want to find out why. I might just do a more info from the web. Go down to, I like FinViz. It's going to open up. Tell me what news occurred this week. And the news this week was TOPS revenue forecasts. Well, that's a good thing. And you could see the market responded. Verizon, I think a dividend breaking above the 200, 4.7% dividend. T-Mobile, no dividend, nice uptrend, sideways, pullback to support, moving again. Frontier, big dividend, don't know if I trust the company. It's down in the penalty box, upper left to lower right, never like to see that. Weekly bongo's been red forever, and it pays a 15% dividend. Diversified banks. You got to be in one of these or many of them. Bank of America, I think, is indicative of the pattern. We had runs up sideways, now ready to roll again. You would have seen here a cup, a handle, and potentially a breakout. I think Bank of America looks good here. To me, it's my favorite, except for maybe Goldman Sachs. And you can see it's pulled back to a squeeze of moving averages, had a mobile breakout squeeze, pocket pivot, and a kahuna on Friday, small dividend. You could also be looking at perhaps JP Morgan, looks a lot like Bank of America. Ready to take off again. Citibank looks good. What doesn't look good is the guys that now have fake auto insurance loans, Wells Fargo and company breaking down again. I'd stay away from those guys. Internet-based services, real quickly. Grubhub was one of the big movers on Friday on earnings, as was Bongo Wireless. Grubhub, a sideways performer at best, and then all of a sudden on Thursday it had a pocket pivot and a kahuna. Maybe that should have woke me up in a mobile breakout from a squeeze, and then Friday it opened up and didn't stop it. I believe this was on earnings. And then Boingo Wireless on earnings, a big gap up, Bible gap up on Friday. I do this analysis every night, looking at the top 10 groups to find what's moving now. Tesla had earnings come out. Look at that very quickly. This is a tough one in my book. I love my car. I don't own the stock. By any measure, it's expensive for stock that doesn't make any money. This is a bet on Elon Musk, and I've seen some people say it's $500 and some people say it's $100. It certainly doesn't get valued like an auto company. Bottom line is big uptrend, pullback, sitting on support, multiple pocket pivots and a kahuna. Looks pretty good, lots of demand. It's just not something that I'm playing, although I do love my Tesla X. Next one down, steel producers. Someday this may actually move. U.S. Steel continues to be struggling down here in the penalty box, going sideways. I guess it was even flat on Friday. It was up 2.5% on Friday. 11 million shares, hence price and volume matter on force. ArcelorMittal looks a little bit better, sideways on end of the week. AK Steels, penalty box, sideways. Commercial Metals Group, again, below the moving averages. I don't see anything to really love in this group, except someday they're probably going to go up. The raw materials might look a little bit better. His Valley, Brazil, Iron Ore Company. Above its moving averages, everything is green. Makes money, 2.8% dividend yield. Cliffs Natural Resources, below the 200, not that exciting. Rio, nice move up here, getting extended. Not really extended, it's been in a downtrend, but moving up off its moving averages. And one that I've liked and continue to like is Techminco. We've talked about this many times. Techminco got in the penalty box and has been moving up nicely over the last 6 weeks. Lots of pocket pivots. The bongos turn green. That one I think is interesting right here as well. Continuing in my top 10, internet media. Yelp was another big winner this week with earnings, and you can see its chart here. 27% move on Friday, made up for some toughness here with a kahuna. Definitely not Snapchat nor Twitter in this pattern. But how could you have been long this thing, going sideways and down? It rewarded those people that have been holding it for a long time or were smart enough to buy it at the open. Might be something interesting to watch closing near the highs. Facebook remains on fire. Nice little flag here. We'll see if it can move higher. Um, and Google, not so much, kind of sideways here. I mean, I like to look, and I often draw boxes on stocks like this, and I know that it's sort of living in this area. And you look at from where it gapped up here, and I'll buy it when it breaks out. When it breaks down, I might buy it off a pullback to the bottom. But until I break out decisively, it's a sideways mover. And then the 10th group, Weibo started working this week. I had a position, I almost forgot about it. And it's got earnings coming out on the 9th. So I'll probably protect myself with puts or get out. But it's one of these big growers, Chinese media stock. And then back. And then regional banks also look strong this week. Here's KRE, sideways, sitting on moving average. Will these things move up or not? Now, you can play these many ways. You could do the XLF, which is a spider for financials. As you can see, it's breaking out. You could be going KBE, which is the bank ETF, sideways move with a kahuna on Friday. KRE, which is the regional bank move ETF. I guess it looks the same. Many ways, as I said, to play these. I think you want to be in financials. Now, as always, I did my analysis, which means I start with a list of a lot of stocks. I gained these from a lot of different lists that I track. And I started with, you can see here, 689 stocks. I looked at 689 charts, and these were some of the charts that I liked. We've already talked about Bank of America. GoPro had some earnings that came out that were strong. I'm going to go through a couple of these and say goodnight. See, it moved up on Friday. Boy, there's a lot of people who are just waiting to sell this stock. I'm not sure I'd be jumping into it, but 2 kahunas in a row, Bible gap up above the 200-day moving average. If you want to play it, just put your stop below the 200. Risk a buck and see what happens. Not a lot of semis looked attractive to me. This is one that did. Microchip technology, uptrend, sideways, sitting on the 50 with a mobile breakout from a squeeze, a pocket pivot and kahuna. I point out the red weekly bongo, but I think Microchip is the best of the semis right now. Here's a small minor. I don't understand anything about Constellium, but it seems to be moving up. Broke out with a Bible gap up on Friday. Makes money, doesn't pay a dividend. This is one that I'll be watching as a relatively inexpensive stock. Not going to say much about oil stocks, but you have a bunch that look like this that have pulled back pretty hard. Remember, I showed you that oil has been holding up, so maybe these energy stocks will catch up. Devon is one with good earnings per share growth that I've been in and out of over time. On my list, you'll also see things here like PBF Energy, which is, I think, a small refiner breaking above the 200, pays a 5% dividend. Callon Petroleum, like Devon, down here in the dumps with a great earnings per share growth. And I think there's one other that I liked down here. Doesn't matter, whatever it is, it looked like the others. Even though interest rates look good, Apollo Global Management, lower left, upper right, asset management pays a 6.8% dividend, made my list, as did the Blackstone Group, which pays a similar 6.4% dividend. And then on the housing front, there were a number that I liked, including Toll Brothers here, pulling back to support. We'll see if it can move up, and KB Homes, which pulled back and had a kahuna on Friday. Here's my overall buy list. How do I get these? I start with the IBD list. So if I opened up my Internet Explorer and I went to investors.com, let's see. I would know that investors.com under stock lists, so I take all the stocks that made their stock list. Then I go to MarketSmith. So this is going to work. There you go. Typically go to marketsmith.com, and what I'll do here is I'll open up, and within marketsmith.com, we have a number of scans that they do for you, as well as some screens. And I have a number of these screens, where are they, that I follow on a regular basis. Show you what I'm talking about. There we go. So I take a number of these screens, and then I complement them with some of my favorite Hgsi scans. I might go into TradeStation and look under my screener 2.0. I run a number of scans here, including John's signals. I accumulate all the bulls into my consolidated buys, my bears into my weekend bears, and then I run up with my favorite stocks. Another one that I liked a lot here is Freeport-McMoRan. Makes, sorry about that, great earnings per share growth compared to its PE, although it's slowing down. Sideways in a flag here. I'm going to look for it to break above this flag and go long when it does that. And then one of my favorite patterns, although stock doesn't make money, this is Loxo Oncology in a big bull run, Bible gap up, pull back into the 50. The bongo's not turned green and had a kahuna come in on Friday. So those are some of the things that I am looking at. I just want to briefly go back and talk about the live programs. I don't do any of these things to make money. I make plenty of money the rest of my life between my jobs and my investing. I do this because I enjoy teaching others. So the reason why you don't pay for these weekly events is because I don't charge, because I don't do them to make money. I've got nothing to sell you. I hold my live events and I put every penny I make into the event, so I make no profits. And typically that means I have a really crazy dinner on the night before to use up any of the anticipated profits. Just reminding John Person's 3-day event, Thursday, Friday, and Saturday. And I will be having my event on the following day, on Sunday, December 3rd. It's the only live event that I'll be doing in Florida this year. And love to have you join me. And appreciate the feedback, positive and negative.